what gold is telling you. This is a huge warning sign. This is not a meme coin. When gold moves like this, it means something. It's up 25% this year, and we're only halfway through April, and it's 25%. And it's happening when the market is down. The S&P 500 is down 10% this year. So it's down 35% priced in gold. These are big moves. And what's even more significant is that this is happening during a time of turmoil. Well, they're not buying dollars. They're selling dollars. Gold is the safe haven. They're not buying treasuries either.
In today's news recap, silver price bounce. Will $33.65 be the next stop? Silver is back in focus as investors seek safety in the face of rising geopolitical uncertainty. U.S. President Donald Trump's latest move, reciprocal tariffs targeting key global partners, has added another layer of risk to an already fragile trade environment. China's sharp response, warning its allies about potential economic retaliation, only deepens the uncertainty. Meanwhile, tensions between Russia and Ukraine continue to simmer, with both sides accusing each other of violating a temporary Easter truce. Against this backdrop of friction, silver's safe haven appeal is on the rise. Adding to the market unease, President Trump's renewed criticism of Federal Reserve Chair Jerome Powell has sparked concerns over central bank independence, just as stagflation worries return to the headlines. With all this in play, silver is increasingly being seen not just as a hedge, but as a necessity in times of global stress. Silver technical picture: bulls defend key support at $32.35. From a technical standpoint, silver is holding firm near $32.78 after bouncing off solid support at $32.35. This level coincides with both the lower boundary of an ascending price channel and the 50-period exponential moving average, giving bulls a reliable line of defense. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
These are big moves. And what's even more significant is that this is happening during a time of turmoil, right? Trump basically started it with these tariffs, right? Launched this global trade war, created all this economic uncertainty. No one knows what the hell's going on. Trade is a big part of the global economy. And again, remember, all of these so-called experts predicted that tariffs would cause the dollar to go up. That's why the dollar rallied before, or right after Trump won, because the markets were saying, oh, we're going to get tariffs. That's good for the dollar. And I kept saying no. In fact, when the polls were swinging before he won, the dollar would go up when they thought Trump was going to win, because they were saying, well, Trump's going to be good for the dollar because he's going to slap on all these tariffs, right? I knew that tariffs would not be good for the dollar. But one of the reasons, too, is that people thought, well, it's going to be, people are going to want a safe haven, right? They're going to want a safe port in the storm, that's going to be created by this trade war. Well, they're not buying dollars. They're selling dollars. Gold is the safe haven. They're not buying treasuries either, because I've said this before. When inflation is the threat, there is no safety in treasuries. But the other problem, if the world now has moved away from dollars, away from treasuries, and away from Bitcoin, not that they ever embraced it, but I'll get back into that. Gold is the only safe haven standing. But what that means is if we have another financial crisis, which I believe we're coming towards one quickly, in 2008, the world responded to the financial crisis by buying dollars. And that's what enabled QE to work, right? Because of foreign demand for dollars. That's what kept the inflation that QE basically was. It kept it out of consumer goods and redirected it into financial assets. So we didn't have to suffer big rise in prices, even though we created all this money. Well, based on what's happening now, if we have a crisis and instead of buying dollars, the world sells dollars, and then the Fed does QE, and there's no escape valve, right? That QE is not going into our bond market or our stock market. It's going into the supermarket, right? Then we're going to see the immediate consequences. So the Fed's not going to be able to bail out the economy if the rest of the world is not cooperating, if we can't export those dollars. Because remember, that's what Trump wants to get rid of. And I'm going to get back to that.
In today's news recap, gold hits record as U.S. dollar sags and trade war concerns persist. Gold rallied to a record as a fresh bout of U.S. dollar weakness, criticism of the Federal Reserve by U.S. President Donald Trump, and persistent trade war concerns underpinned haven demand. Bullion roared above $3,400 an ounce as the U.S. currency fell to the lowest since late 2023. Trump has contemplated firing Fed Chair Jerome Powell while making the case for lower interest rates. Fed Bank of Chicago President Austin Goolsbee warned against efforts to curtail the monetary authority's independence. Firing Powell not only undermines the principle of central bank independence, but risks politicizing U.S. monetary policy in a way that markets will find unsettling, said Christopher Wong, a strategist at Overseas Chinese Banking Corp. If the Fed's credibility is called into question, that could erode confidence in the dollar and accelerate flows into havens, including gold, he said. The precious metal has soared to successive records this year as the trade conflict has unsettled markets, hurting appetite for risk assets while accelerating a rush to havens. Holdings in bullion-backed exchange-traded funds have risen for the past 12 weeks, the longest run since 2022. Central banks have also been adding the metal to their reserves, underpinning robust worldwide demand. On the trade front, China warned nations against striking deals with the U.S. at the expense of Beijing's interests. Data due this week, including revised forecasts from the International Monetary Fund, may reinforce concerns about a global slowdown. Banks have become progressively more positive about gold's prospects as this year's rally has gone from strength to strength. Among them, Goldman Sachs Group Inc. has forecast the metal could hit $4,000 midway through next year. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention. Get it at goldsilverstacks.com with a whooping 50% off in April.
This is what gold is telling you. This is a huge warning sign. This is not a meme coin. When gold moves like this, it means something. It's up 25% this year, and we're only halfway through April, and it's 25%. And it's happening when the market is down. The S&P 500 is down 10% this year. So it's down 35% priced in gold. This is a big decline, and it is highly significant. And the mainstream media is completely on the week. I mentioned what happened to the price of gold, up about 2.7% on the week. The stock market had another down week. I mean, we had some up days, but the Dow was down 2.7% on the week. And it's now down 7.7% on the year, approximately. S&P 500, not as bad. The Dow got hit pretty hard. United Health got whacked, I think, almost 20% today, and that really dragged down the Dow. So that caused, I think, some extra weakness. But the S&P down 1.5% on the week, but it's down 10%, as I mentioned, on the year. But the NASDAQ is down 16.5% year to date, and many stocks are down much more than that, down 2.7% on the week. The strongest of the indexes was the Russell 2000, got a little bit of a bounce, up at 1%. So now it's only down 15.8%, but it's further from its high than the NASDAQ or the other indexes. But now year to date, the NASDAQ is the biggest loser. But gold stocks had another good week, although not nearly as good a week as they should have. Gold was up 2.7%. The GDX was only up 2.4%. Should have been up a lot more. Now, the GDXJ, which has some of the smaller ones, not small in an absolute sense, but just smaller than the biggest ones, was up 4.7%. But listen to these year-to-date returns for those indexes. The GDX is up 51% this year. 51%. A rare occasion, somebody on fast money, but throughout the day, during the day, and all these shows, and they have analyst after analyst coming on, and like, what should people buy? What should people buy? Buy Meta, buy Netflix, buy Nvidia. Nobody has come on that show and picked any of these gold stocks that are in this index, even though that a lot of them are hitting 52-week highs. The only ones that haven't right now are Newmont and Barrick, but all the other stocks have made new highs on the year, and they're way up. And they're not even talking about these stocks.
What do you think of Andy Schectman's call for gold surpassing $4,000? Is he spot on, or do you see things unfolding differently? Do you think we're finally entering that explosive bull market he's been predicting, or could this just be another peak in the cycle? More importantly, are you stacking right now? Are you positioning yourself in physical gold and silver, or exploring mining stocks instead? Let me know your thoughts below. I'm reading every single comment. And remember, stay vigilant. The financial landscape is shifting fast, and opportunities like these don't wait. Now check out this video right here, and I'll see you on the other side.